Today we're going to talk about a well-kept secret. That is your right to convert a life insurance policy into a long-term care benefit to pay for your choice of senior care, whether in the home or a senior living community. Do you have the financial resources you need to pay for your senior care? The subject of how to pay for long-term care is one most of us avoid until we need it. But the fact is that 70% of us will need some form of long-term care before we die, many of us in a nursing home. More than half of us also mistakenly believe that government programs, such as Medicare and Medicaid, will pay for any type of care we choose. But Medicare does not pay for assisted living or an extended stay in a nursing home. By the same token, Medicaid is only designed to serve those with virtually no savings, no home, and no other assets. 75% of people will exhaust all their savings in less than 1 year paying for long-term care. The cost of care can wipe out years of careful and thoughtful financial planning and savings in a matter of months. 1 year in the average nursing home will cost a family $7,000 a month or $84,000 a year. Assisted living, which is not covered by either Medicare or Medicaid in most cases, can cost nearly $3,500 a month or more than $40,000 a year. Staying safe and comfortable in your home as you age is also very expensive. Non-medical, in-home, or private duty home care can cost well over $6,000 a month or over $76,000 a year. Ultimately, the burden of care for an elderly loved one falls on the family caregiver, most likely a wife or child, or often a brother, sister, uncle, or friend. But whoever it may be, there is no doubt that the cost will be significant, both financially and emotionally. Most striking is the financial toll senior care takes on the caregiver. Family caregivers spend over $5,500 a year to take care of a loved one, and almost half say caregiving expenses have caused them to use up all or most of their savings. These are savings they will not have to take care of their own needs as they grow old. Caregiving for someone you love can literally make you sick and or broke. The good news is there are dedicated professional caregivers standing by ready to and willing to help families care for an aging loved one. But senior care, whether at home or in a senior living community, costs money. That is where life insurance policies can help. When we're talking about life insurance in this country, we're talking about an enormous amount of money. Right now, as we speak, there is $500 billion of death benefit in the hands of seniors 65 and older. There is far more life insurance in this country than there is home equity. Unfortunately, most of that $500 billion will either be lapsed or surrendered back to the insurance company for little or no value. In fact, 88% of all policies will either lapse or be surrendered for little or no value. Some of that is term insurance, but a significant amount comes from seniors who lapse or surrender their policies in the last 3 to 5 years of life when they need money the most to pay for care. 82% of all long-term care dollars are spent in the last year of a person's life. But seniors and their families have very limited options to access the value in a life insurance policy when they do not need or cannot afford it. Also, if a senior is considering spending down their assets to qualify for Medicaid, a life insurance policy will count against them in most states. In many cases, state Medicaid programs consider life insurance an unqualified asset that needs to be liquidated and spent on care prior to going into public assistance. 38% of Medicaid applicants have a life insurance policy they will need to liquidate in order to qualify for Medicaid. In far too many cases, a family who cannot afford the premium payments will lapse or abandon the policy for no value. Let's be clear. Letting a life insurance policy lapse is like throwing it away. When a senior lapses their life insurance, the insurance company keeps all the premium payments and they're no longer responsible for paying out a death benefit. If the policy has any cash value, and many do not, seniors can surrender the policy back to the life insurance company, but usually for less than 10% of the policy face value. Fortunately, there is a better solution. Seniors and their families can access the value in their current life insurance policy to pay for the senior care of their choice by converting the policy into a long-term care benefit that pays for the care provided directly. A long-term care benefit will pay for virtually any kind of senior care you choose, including assisted living, in-home care, skilled nursing, independent living, hospice, and related senior care services. How is this all possible? What most people don't realize is that they own their life insurance. Many people think the life insurance company owns their policy, but nothing could be further from the truth. The Supreme Court established the legal rights of policy owners in 1911. Justice Oliver Wendell Holmes wrote the majority opinion in the landmark case establishing that a life insurance policy is personal property, just like a home or stocks. You own your life insurance policy and have the legal right to use it to pay for senior care. I often get asked the question, why would I use my life insurance policy to pay for senior care? And that's a very good question. To answer it, you first have to ask, why did I buy my life insurance policy in the first place? Most people purchase life insurance to protect their family from financial ruin if a breadwinner should die suddenly. But over time, circumstances change, and so do insurance needs. The question if you need to pay for senior care is, do I still need my life insurance? For instance, are your children grown up and financially independent? Are the premium payments becoming a burden to you? Do you want to preserve other assets such as stocks or bonds? Maybe you don't want to sell your home or a family vacation property. Life insurance is a depreciating asset relative to inflation. You may want to use your life insurance to pay for senior care instead of liquidating a home or a stock portfolio that, if properly managed, can be expected to appreciate in value over time. So how does it work? Once the policy is converted to a long-term care benefit based on its present-day value, the funds are deposited into an FDIC-insured irrevocable benefit account in a nationally chartered bank. This account is specifically designed to ensure that the funds will only be spent on senior care services. Once the money is deposited in the account, your family can direct the funds to pay for any type of senior care they choose. Automatic payments are made directly to the care provider of your choice on a month-by-month basis. The payments can be adjusted to address changing care needs and circumstances. The benefit is also portable. So if you start off at home and then move to a senior living community, the benefit will follow you to the new community. A funeral benefit is also preserved for the family to help with end-of-life expenses. The funeral benefit is the lesser of 5% of the policy face value, or $5,000. Importantly, the policy conversion is designed to comply with all state life insurance and life settlement regulations. And if the senior should pass away before the full benefit is spent, any remaining balance is paid directly to the family or named beneficiaries. Almost any type of life insurance is eligible for conversion to a long-term care benefit, including term life, universal life, whole life, even group and government life policies. The life policy needs to have a death benefit of at least $50,000 or greater to be eligible for conversion into a long-term care benefit. The benefit pays for virtually any type of senior care, including assisted living, home care, both private duty and skilled nursing care, skilled nursing or nursing home care, Alzheimer's and memory care. The benefit also pays for related senior care services, such as retrofitting a home with a ramp and railings, or purchasing a hospital bed so you can stay safely and comfortably in your home. Converting your life insurance into a long-term care benefit is also tax-free in most cases because the funds are spent directly on care. If the insured is chronically ill, the proceeds will not be subject to U.S. federal income tax so long as they are used to pay solely for qualified long-term care services as defined by the IRS. Also, the current estate tax exclusion is $5 million. Therefore, unless the insured has an estate in excess of the exemption, any residual amount of the long-term care benefit which remains in the account when the insured dies may pass to the account beneficiary tax-free. But as with any financial transaction, you should consult with your own legal and tax advisor to determine whether there are any special circumstances that may apply to your situation. This program also keeps people off Medicaid. If a senior is considering spending down their assets in order to qualify for Medicaid, in most cases they will not be allowed to keep their policy. Medicaid considers life insurance a disqualifying asset for Medicaid eligibility that must be spent down in order to qualify for public assistance. But because in a policy conversion, the life insurance is sold for its fair market value and the funds are protected in an irrevocable account, that is only used to pay for long-term care services, it is a Medicaid qualified spend down in most cases. In this way, the program may allow people to pay for their care privately with their life insurance before going on to Medicaid. Let's look at some examples of some people who have benefited from using this program. The first example involves a 70-year-old man who had a $250,000 term life insurance policy. When his daughter found out about our program, she was getting ready to lapse the policy and move her father into a nursing home because her family could no longer afford the premium payments. If they had lapsed the policy, her father would have received nothing in return for paying the premiums for years. Instead, we were able to convert the policy into a $150,000 long-term care benefit. Her father wanted to die at home, and this benefit allowed her to grant him his wish. When he did pass away, there was more than $60,000 remaining in the benefit account, which went to his daughter as a death benefit. In this case, the life insurance was able to provide the daughter with a legacy inheritance, but was also able to help the daughter pay for care and grant her father his dying wish, which was to spend the remainder of his life at home. The second example involves a 73-year-old woman who had a $100,000 universal life policy. Now, this policy did have some cash value, but it had been eaten up by the premium payments. Most life insurance companies will deduct missed premium payments from the cash value in a policy unless there is no cash value left, and they will send lapse notices then to the owner. That is what happened here. The daughter of this insured woman had not paid premiums since taking charge of her mother's financial affairs, but then began receiving lapse notices. She could not afford to pay the premiums and was getting ready to lapse the policy. Instead, she converted it into a $35,000 long-term care benefit. In both of these cases, the policies would have been lapsed or surrendered for little or no value, but were instead converted to pay directly for care, delivering far more value to the senior and their family. How do you get started? It's very easy. When you contact me, we will fill out a simple one-page application. You will need to sign some authorization forms so we can communicate with your life insurance company and get relevant policy information. You will also need to provide access to the last 2 years of medical records, either by providing the information directly or authorizing us to contact your doctor. The entire process takes between 30 and 45 days to complete, from the application to distribution of funds to a care provider. There is absolutely no cost or obligation to apply and find out how much of a benefit you might receive. Even after you have received an offer of a long-term care benefit, there is no obligation to complete the transaction. Many families are not yet ready to use this program when they first hear about it, but after they learn more and understand the value proposition, they are very grateful to know about it and make arrangements to ensure they do not lapse or surrender the policy. Then, when the physical and financial needs of a loved one become more acute, they're ready to move forward and convert their policy quickly. Life insurance policy conversion to a long-term care benefit has received a great deal of attention in the media. National media outlets such as the New York Times, Fox News, the Wall Street Journal have all done stories on this important new funding option. State legislatures have also passed bills mandating that their Medicaid departments inform seniors about this option to help them pay for care privately instead of going on to Medicaid. An informed senior is a less vulnerable senior, and knowing about all your funding options is critical to making prudent decisions about your or a loved one's senior care. Converting your policy into a long-term care benefit is something most people have never heard about. Whether you decide to convert a policy or not, you need to know more about this important funding option so that you can make an informed decision about a life insurance asset that you own and have paid for over years. I look forward to helping you fund your senior care using a life insurance policy. Please give me a call at 877-270-3127, or you can go to my website, iwantmyltc.net.